With the interest rate hike, a lot of people are wondering, is this the last one? Well, going back to my analogy about the plumber trying to fix a leak with a hammer, it's not going to work. They're not doing anything about the supply crisis. They're still immigrating far too many people to this country for our ability to provide housing. Welcome back to the REI Hot Seat. Andrew Hines here to talk about the interest rate increase. So what's going to happen in Canadian real estate? Question many are wondering. A lot of people thought the interest rate hikes were done. Well, surprise, surprise, they are not. So I'm going to do a bunch of screen share on this episode, go over a couple of key articles that I came across, just trying to get high level what's going on, what's the root of the problem, and it's actually a lot more simple than you might think. So let's go through it. I mean, obviously we know the key factors are, if you've been paying attention to the news about immigration, is we're bringing a lot of people into this country. I believe the most recent figure was we're looking at about 500,000 people a year over the next several years. And if you can't build that many houses, naturally, we're going to have ourselves a little bit of a challenge. So what are they trying to do with these interest rate hikes? Well, my best assessment of what they're doing is it's kind of like somebody who doesn't really understand plumbing trying to fix a plumbing leak with a hammer. It's not really going to work. And the issues that affect real estate in Ontario are nuanced. There's many different things that are playing in. One, we have our immigration. Two, we have our restriction to the ability to build. And then we have also the cost of building. There is such a high tax environment. I heard a stat the other day that about 32% of a new home's cost in Ontario is going to taxes, whether that be through development charges, municipal taxes, provincial taxes, HST, and so on. So if you think about that, one easy thing that they could do to solve supply, and you know, supply and demand intersect, and where they intersect, you have equilibrium price. All we would have to do is just drop those taxes off. Now, all of a sudden, a whole bunch more people are going to be motivated to jump in that market, because now what would have gone to tax can go to their profit. That's typically the way a free market works. If I see an opportunity, if I see there's a whole bunch of demand in one area, I'll jump in and start offering my services because I see that the grass is a little greener on the other side. That is what makes a free market work. Well, what stands in the way? Regulation and taxation, typically. And Ontario is heavy on both of those. And Canada in general, we've obviously got issues across the board. So using Ontario as an example. So we can see here on our screen share that the Bank of Canada raises the policy interest rate 25 basis points. So where does that leave us? That leaves us at 4 3/4. This is the number that your bank is using to come up with their prime rate. So banks are typically choosing a prime rate that's a spread over the overnight rate, which is the rate they can borrow funds from the Bank of Canada on. So where does that put our prime rates now? We're nearly 7%. And yeah, that's not fun. If you're prime minus on a mortgage, that's a little bit better. But a lot of people are prime plus on their lines of credit and probably feeling the pinch from a year and a half ago's time. With the interest rate hike, a lot of people are wondering, is this the last one? Well, going back to my analogy about the plumber trying to fix a leak with a hammer, it's not going to work. They're not doing anything about the supply crisis. They're still immigrating far too many people to this country for our ability to provide housing. So the demand isn't going anywhere. What they're ultimately trying to do, it would seem, is break something. Break the economy, cause it to go into recession, and then when it goes into recession, you might have families amalgamate. People finally start to feel the pain, so you have kids moving back in with parents. You have multiple different family members sort of amalgamating and moving into one house, and sort of artificially solving the problem temporarily. That's going to be pent-up demand in the long run, but it does allow for this inflation figure that they're trying to control to come back down. So the inflation number that they're trying to control is here, according to our consumer price index. So this was released in May, still waiting on the one for June, but we're still sitting over 4% on inflation. They want it down around 2%. Typically, the Bank of Canada's policy is between 1 and 3. And a lot of people are speculating that it's going to be really hard to come down that last little bit. And of course, housing is a factor in there, but mainly housing is sort of a victim of these policies. So question is, what's going to happen long term? I have a key question to ask here. How long are people going to continue to want to come to Canada when I heard most recently that it takes being in the top 5% now to afford the average home in Canada as far as income earners go? If you think about that, if we're selling sort of the Canadian dream, which is the Canadian version of the American dream, which is why I think a lot of people are coming here, because they like the capitalist idea. They like the idea that if they work hard, they can make it. And I think immigrants in general still think that. But the more we sort of drive things in this direction, we're probably going to scare some of them away. So that's, an argument to the contrast. Will immigration continue to stay at the current levels? Well, I found an article here, if you're looking at my screen share, that we actually had a drop in applications in the first quarter of 2023. Now, that doesn't mean we're immigrating less, but if less people are applying, that might just mean that we are taking lower quality applicants. But question is, how long until we're not getting quality applicants or people who are coming with education, strong wealth, who are going to add a lot of value to our economy and drive our GDP? If we're not getting that type of people, are they more likely going to be the type of people that are going to use assistance and actually be challenging our infrastructure and our economic systems more so than providing value to them? Let's just dive into some of the numbers here for the different locales and see how they're doing and see what's been happening to home prices and why this might have played into the decision to go ahead and do another interest rate hike, followed by news that we're probably going to have more. So Hamilton's a little weird this time. This got this big spike here earlier in the year, which I don't think makes a ton of sense. Just on Zillow market trends here, yearly change, we're only 4.4% down. And considering how much the market fell, that's actually really not bad. That means we've actually recovered quite a bit of the price. And you can see here, the average price sold. We definitely had a spring market. So the prices have been climbing and climbing. See similar stats in London, Ontario. So here on House Sigma market stats, you can see here back in February 2022 was our high, median price at $785. We did have a drop and sort of bottomed out at the beginning of the year and then started climbing back up more recently. And you can see down here at the bottom is very telling, is available inventory. So days on market has been shrinking, which means the demand is up. It means more properties are selling faster. They're staying on the market less, which ultimately means less selection for buyers. And how could that not continue to happen if we keep immigrating at the pace we're immigrating? It doesn't matter how expensive it gets. People do still need a place to live. They got to figure that out one way or another. So it's going to be real hard to solve the increasing housing prices with interest rate hikes alone. I think there's going to need to be some other sort of policy that's going to help that, decreasing regulation. Of course, Bill 23 came out a few months back, and that's a big help, allowing people to build more units. But if you're anything like me and I'm in the construction business, I don't love the idea of trying to take on those projects knowing the cost of construction these days and how hard it's been to get trades. Of course, that may get a little easier now that we do have some concerns of the future of the real estate market, but it doesn't look like people in general are feeling that way. It doesn't look like people have changed their behaviors. They've really felt a pinch yet. They are still spending. They're spending on housing and more or less continuing business as usual. Similar things that we'll see here in Toronto. So in Toronto on House Sigma, we're seeing only a 2.2% change year over year from last year. So you can see what's been happening of late. Real estate's hot. And if you've been talking to people, realtors specifically, we're talking bidding wars, losing out on houses, a lot of anecdotal stuff suggesting that the market has been red hot. And that's pretty wild to think in this interest rate market compared to a year and a half ago. Again, same type of thing. Days on market is falling. So it really does seem like at least part of the decision to make this rate change for the Bank of Canada does tie into real estate a little bit. But again, go back to that analogy, that really just seems like a plumber using a hammer to fix a leak. And finally, wanted to take a look at another market, a little bit different here in Ontario. And you can see here, we did see prices come down a bit in Niagara Falls. Of course, this could be skewed by a low number of transactions in general. It's tough to take too much from that one little blip, but we can see average days on market has fallen, and then it's up a little bit. So maybe a sign that some markets are going to adjust, but our hot markets, our big urban centers like Toronto may continue to go up. I'd love to hear your thoughts. What are you thinking? Because really, I just put this out there as a bunch of information and competing forces. Like I was literally searching on ChatGPT, asking it questions. Is there any precedent for our market the way it is? Like the combination of pretty much across the board, like across Ontario, things are not really affordable anymore. Across Canada, the average home price is not really affordable to multi-generational Canadians. But we bring in so many people to this country that it almost just offsets. Like if it was just us and we weren't immigrating anymore, we'd probably look a lot more like Japan with declining real estate values as our population shrinks because people are having less kids. And then naturally the prices would sort of slowly come back down. But we're not doing that. We keep bringing people in. And I guess the question is, how long will that last? Is that long-term policy? Or eventually will we just not really get the number of applicants needed and not really bring in that many and this market will normalize? Let me know what you think in the comments below. I know this was a bit shorter of an episode or a bit different of an episode. Hoping to have Jake back for next week, and we'll be going over some more off-market deals. Like I said, comments below. Let me know what you think. And if you made it this far, like and subscribe. Look forward to seeing you on the next episode.